And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show, the show where we put you in front of where the action is in the broader markets. And we're certainly seeing a bit of shuffling taking place with cross currents relating to the overall health and possible treatments for COVID-19 and other backdrop information as well that we are going to get into. And as always, with an eye toward helping you really get your arms around not only where the markets are currently, where they may be headed going into next week and beyond. So let's go ahead and get started. Take a look at what we're going to be reviewing today. As always, we are going to take a good look at where the markets are now, not just the broader markets, but we want to drill down behind that, see if we can uncover where the strength is and how you can capitalize on that. We're going to take a look at vaccine approvals versus record COVID-19 cases. That was the tug of war that was taking place, particularly toward the end of the week. Also, what's up with small caps? They are on a tear. We're going to take a look at how you can capitalize on that. Easy ways to screen. I'm going to share with you some stocks that are setting up really quite nicely in that small cap space. Also taking a look, continued move into the recovery stocks and cyclical names. We're going to drill down into that area as well. Last week, we took a look at energy and that group was up almost 6% this week relative to a negative S&P 500. Also, hopefully we'll have time for this, but how you can use ETFs to play the strength that's taking place in the broader markets. I've uncovered 2 ETFs that really have superior underlying stocks within them. We'll get into the ETFs and those stocks as well. Let's take a minute first, take a look at some of the headline news for the week. You want to have a good sense of what may be driving this market. And of course, front and center is the fact that COVID-19 cases are on the rise, as well as hospitalizations were record levels not seen since last April. Very disheartening news, but that is certainly one of the drivers as far as where we saw later in the week strength. And then weekly jobless claims, they came out yesterday and there was an increase in jobless claims. So it did break a 4-week downtrend where jobless claims were reducing. So unfortunately, we are seeing a pickup there, but retail sales was up. That is with GDP, 2/3 of that number is driven by US consumers. And the retail sales were up. That's the good news. It's a continuation of an upward momentum, but not quite as much as expected. We're going to get into that as well. Industrial production regained its upward momentum with an improvement this month, and that is always what you want to see, particularly as industrial stocks are really picking up. Also, productivity soars for actually, that is an old number. We're going to leave it at that. But let's go ahead and drill down. We want to really get a good feel for where the markets are, what to be on the lookout for. This is a daily chart of the S&P 500. Quite simply, I do like to see that index remain above an upward trending green 10-day simple moving average. And this week we did end the week dipping just below that 10-day simple moving average. Your other momentum metrics still up there above their net neutral 50, so in good standing, RSI and stochastic, so that is positive. At this juncture, 3,500 is that next area of support. So if we go into next week, the shortened week, and we wobble a bit, that is going to be the level that you're going to want to be on the lookout for. But for now, we are remaining in that uptrend. Let's go ahead and drill down further behind the markets, and we want to take a look at the 11 sectors, and they're all positioned here. This is a daily 2-month chart, and I've gone ahead and added an RSI, relative strength indicator. I want that descending because I want to be able to uncover where is the relative outperformance. And this is something that I do each and every week. And for those of you newer, if you stay with it, you'll see that this is not whippy by any means. It is really intended to show you a steady progression. The weaker areas down here, you're looking for that progression up to the forefront and then a retention of that. So earlier in the year, certainly 4 to 5 weeks ago, it was all about technology, internet related communication services, and discretionary. So we've been witnessing a slow but certainly very steady shift into we're calling the recovery stocks. These are cyclical names that perform well when the economy is recovering. And of course, the vaccine news really sped up this movement into the forefront. So energy, industrials, financials, and materials, all classic recovery cyclical areas. So we're going to get into two of these areas today. I've covered financials 2 weeks ago. Those of you that missed it, by all means, a lot of very interesting bank stocks on the upside moving. Last week we covered energy, so we're going to switch it up a little this week, but more importantly, taking a look at where we are now. Technology was in fact down for the week, and not by much, but certainly enough. It actually down 0.9%, so a little bit more than the S&P 500. There were pockets of strength in here, however, and we're hopefully can get into that because you want to be able to embrace two particular areas. In the next slide, I'll share with you. Healthcare, very tough week. The group was down 3%. Those managed care stocks that were the darling of Wall Street just several weeks ago, down over 5%. But let's go ahead and move forward, take a look at some of the underlying industry groups to drill down further beyond the sectors. So again, same idea where I've gone ahead and added that RSI descending. I have a number of ETFs here. I focus on growth stocks. So I'm going to have that tech software ETF, IGV, semiconductors, SOXX, and then mixed in there is the regional bank ETF, retail, transports, and small caps. So let's take a look. Again, we are wanting to focus on where that relative strength is. Where is the outperformance that is taking place here more recently? Because of course you want to be in those areas. You want to be participating. So two areas up here, front and center. First is rather surprisingly, this is XRT. I'm going to go ahead and pull this ETF up because it is hitting a new high, and this is the S&P 500 retail index, up 5.5% this week. A little insight I'll tell you about XRT. It is an equal weighted ETF, so you don't have stocks that are really heavily weighting on it. And primarily, these are internet related retailers. So that's giving you a little bit of a hint as to who is winning, if you will, recovery versus stay at home. And that is all about internet retail. But even more importantly, they're starting to come out with their numbers, a lot of early holiday shopping taking place. So there are very sound reasons for these internet related retailers to be outpacing. Here we have small cap stocks, another huge outperformer, up 2.3%. And take a look because small cap stocks are hitting a new high in price. This is another area in line with the cyclicals when the markets, or actually the economy, is in a recovery phase. Small cap stocks do really well. You can look at the 08-09 bear market, take a look at the winners out of that, and it was led by those small caps as well as the cyclical areas. So let's drill down further. I talked to you about two different areas that really that held up better, quite a bit better than the overall XLK technology sector. And this first area here is software, semiconductor. For those of you, again, that watch this show each week, if you don't, I urge you to, because I did point this out last week that semiconductors held in remarkably well despite again, tech not doing so well last week. And then as we drill down, we can see this is that regional bank ETF. It was up about 1.1% this week, so still in good standing. Transports had a good week. They were up about 1.2% for the week, all about airlines. We hopefully can have time to get into that. Now, more recently, I'm starting to add, you're not going to see a whole lot here. I'm going to pull the weekly up, but this is the US oil fund, oil prices, really quite depressed. So it's hard to see, but they were up 4% this week, which is constructive, not like some of the other more recently vibrant areas, but good to see energy up here in the forefront, supporting a potential continued move into that area. Now, software stocks are down here in this lower right quartile, which generally speaking are your laggard areas. NASDAQ, tech-laden NASDAQ. Biotech's also had a tough week this week, holding back that NASDAQ. But within software, I do want to point out to you, it has been a relative underperformer. This is an area that I'm very familiar with. I traffic in a lot of stocks here. And we can see, however, it did pick up later in the week. So this was another underlying area that was up 2% in a broader market that was down almost 1%. So a nice pickup here in these software stocks going into the latter part of the week. So one other item that I did want to go ahead and share with you before we need to take a quick break is I'm going to take us to this S&P 500 sectors and take a look here. We're looking at the 1 week performance. And in particular, what I did want to go ahead and share with you is into consumer discretionary. This is heavily weighted by retail. And take a look, there are quite a number in the way of sub-industry groupings. That's what we are looking at here. And I did want to share with you insights that you can gain by just taking a quick glance on the week to date performance of these underlying sectors. So here we are, consumer discretionary, autos up here, all about Tesla and a couple of other auto stocks that are doing well. They came in well on that retail sales number this week. But up here in the forefront, we can see it is furnishings, clothing still doing well. But really, we are still seeing the what I like to call lockdown kind of stocks that are doing well, particularly as it relates to furnishings. But as we drill down, we can see travel and tourism, hotels, they had a spike initially last week, restaurants and bars, because of that vaccine, but they are waffling and deteriorating a bit. In other words, signaling that the lockdown trade is not over. In fact, it was reinvigorated again this later in the week this week. We're going to take a quick break. Lots more to cover. We'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. I did want to go ahead and dive right into that small cap area. We talked about the group hitting a new high, superior relative outperformance. So here is one way that you can get your arms around where the leadership is and some of the more interesting stocks. So on this first page, StockCharts.com, this SCTR, that stands for StockCharts technical rating. So we're going to get a report here that focuses on small cap stocks. And what you'll see is that it is already pre-sorted. The higher the number, the better. Really, this is your highest number, 99.9, and it's simply telling you that the chart is in very good standing. So I've gone ahead and gone through. I'm very familiar with a number of these stocks. So what I'm going to do right now is share with you some of the outperformers that, even though they're way up here in this forefront, they are still quite attractive. So this first one is Kirkland, KIRK. Let's take a quick look at the chart. This stock is a home furnishing company. It was a big winner out of the bear market. From my work, I do like to revisit these big winners. They are oftentimes going to have meteoric rises and then periods of consolidation. This week, we did break out. Now, let's be fair, it did have a 16% move for the week, and many of you may think the move is behind you, but I urge you take a look historically at this stock's capability when it gets moving. So we did have that base breakout on volume. Let's take a look at some of the other bullish characteristics here. RSI trending upward above that 50, but this MACD, that's a moving average convergence divergence. It is a momentum indicator. You want to see that black line cross up through the red. That is telling you that this period of consolidation, or in some cases it may be a downtrend, that it is reversing. The momentum is shifting to the upside. When you marry that with a base breakout, really quite attractive. Let's go ahead. I can go back here to that scooter rating, small cap. We'll take a look at a couple of other names here. Workhorse, this is WKHS. Let's take a look here and I'll share with you some information about the company. It did have a meteoric rise here on huge volume. The company is involved. They're actually considered the leader in commercial electric vehicles in the US. Unlike Tesla, Workhorse has active vehicles, 400 that are in operation, and they actually were upgraded earlier in the week to a buy rate signal, or actually Wall Street has it as a buy. So more importantly, let's take a look at the chart here. We can see that it is continuing to form the right side of the base. It's at about $26, and right here at about 30 is where we anticipate a nice base breakout. You can see your RSI trending upward. Now let's go back here and look, because MACD really, I find it super helpful, because in this case, we did get that nice black line up through the red. And despite the fact that the MACD was below the zero, it can still be a very viable signal, particularly, let's draw our eye up, when you have that RSI trending upward above 50. Really, from my work, you don't need all the signals. Ideally, you do want the RSI and MACD coinciding bullishly, but Workhorse does appear poised for further upside. Let's go back and see if I can get back into that small caps list, because I want to share with you another way. I've already done the work, if you will, but I'm also very familiar with a lot of these names. If you're not, you can simply hover over the Tupperware. I pointed this stock out about 4 weeks ago on this show, but when you hover over it, it's going to tell you, for instance, this is not going to be very interesting to me. It's already tipping out at new highs, and it's in the biotech space, which not only is volatile, oftentimes will not have earnings. But I'm going to drill down a little bit further here. We can take a look at Big Five. This is a stock that Aaron and I covered in our yesterday Chartwise Women show. I'm going to pull up. Okay, we're looking at the daily. So we can see another one that was a big winner, big gap up here. They really shifted to digital sales from brick and mortar. The company really got it right, sat out, but more recently does appear to be perking up again, because we can see again that MACD crossover. They did come out with earnings at the end of October. They were 156% year-over-year earnings, to actually 2,600% above estimates, but one to keep certainly on your radar. One last name, and I'm not going to bother going back. I'm just going to share it with you for the sake of time. We have lots to cover today. This is Overstock, and as many of you may know, they do a lot in the way of home furnishings, and again, another big winner out of the bear market. Lockdown individuals wanted to update their homes since they'll be spending quite a bit more time. And we can see that the stock has languished quite a bit after peaking in late August. Now, I will also tell you that Overstock is a cryptocurrency play. They did get into Bitcoin, but more importantly, let's take a look at the chart, because here is what you want to be on the lookout for to indicate that Overstock may be in fact resuming its former glory days. First thing is you'll want the stock to break above each of these simple moving averages. It's a 10, 21, and most importantly, the 50-day. And I'll tell you the relevance there. But first, let's take a look at the RSI. It's at 48, poised to turn bullish above 50. Now, we've had a little bit of a MACD crossover, but you are going to want that to also be up above that net neutral 0. But take a look here, because Overstock has had 3 different downtrend reversal attempts, and that 50-day simple moving average has really been the brick wall, if you will. So that is what you're going to want to see, a break above that on volume. So let's go ahead. I do want to go ahead and move into some other areas and share with you underlying stocks within. So we're going to go back to the S&P, I'm sorry, the sector review. I'm going to share with you how to get there from this first page sector summary. And again, that 1 week, at the end of the week, you're going to wait for the close to the close and you can get that 1 week view. But industrials, we've been following this group even before the vaccine and the potential recovery play, because a lot of these stocks were coming out with exceptional earnings as well above estimates. So here we are, underlying sub-industry groupings within industrial, and we are going to review an area that I shared with you last week, and this is aerospace. I talked to you about it. For those of you that may have missed it, go ahead back and look at last week's show. It can really be very instructive and educational as far as what to be on the lookout for, but up 4.7%. As some of you may recall, one of the primary reasons for that was Boeing. Let's take a quick look, because it is a heavyweight in the industrial space. They were due this week to get FAA approval to fly their 737 MAX airplanes again. And they did, in fact, get that on Wednesday. So Boeing had a nice pop on that. And this week, Europe is set to pass what's called an airworthiness directive, so that the planes can be not only can fly, but new orders can be processed for Boeing. So from here, really what can be helpful is taking a look at some of the biggest suppliers to Boeing. And I did touch upon this last week. The biggest supplier is Spirit Aerosystems, SPR. So a couple of things are occurring here with SPR, reversing their downtrend, breaking back above these simple moving averages. And we also had this week, in addition to last week's gap up, downtrend reversal volume, this week we did get a longer term base breakout. This is about a 5-month base breakout, nice volume characteristic. So that is one stock I did want to go ahead and cover with you. And another name that we can take a look at, this CAE. Now this, I'm going to go and look at a weekly here and share with you. This was a big winner with my MEM Edge report. Back in here, we were able to capitalize. They are actually provide flight simulators, a lot in the way of flight training, and it really unfortunately fell out of bed. But let's take a look at the daily, because it is very impressively kind of reversing this downtrend that we saw. This is another one that had, upon that gap up, it had a nice base breakout, nice volume characteristics in a confirmed uptrend. And actually Boeing did confirm CAE as a resource for pilots newer to their 737 now flyable MAX airplane. Let's go back, take a look at a couple of other stocks in the industrial that are suppliers to Boeing. And what I want to look for is RTX, Raytheon, and another. So you're going to see a lot of these downtrend reversals as Boeing gets heated up and they do begin production again, because these guys are the suppliers. Technically, I am looking for not only a nice downtrend reversal where it breaks above the 200-day on volume, I do also like to see that base breakout that we are poised to experience here. And actually, I have other names, but I did want to make sure that we took a look at the ETFs. I mentioned to you that they can be a really great way to, for lack of a better word, to play the move into newer areas, if you will. So what I'm going to do is I ran a screen and I wanted to see what ETFs were top performers. And I'm not going to be focusing on those triple pro power type of ETFs. This is going to be more plain vanilla, but more telling. So what we're looking at here is the S&P 500, and it's the ticker SPHB. We can see it's had a nice, actually 2-week period here. Not a lot of volatility, but I mean volume. But what I'm looking for is from here, I want to see what stocks are in this ETF. Why is this powering to new highs? This is the S&P 500 high beta, and by high beta, basically these stocks are riskier, but they do provide higher returns. And I will tell you, I went through the top 10 holdings, and this ETF really is in some winning stocks, and I would argue that does not look high beta to me. This is Tapestry, TPR. They have 3 brands. It's more luxury, Coach. Oh my goodness. Oh boy. Kate Spade is another one. Stuart Weitzman. Those are their brands, but nice confirmed uptrend. Let's take a look at some other names in here that might not be quite as advanced. This is Discover Financial Services, credit card company. They did come out with the strong numbers on October 21st, and in a nice confirmed uptrend with holiday shopping around the corner, there is anticipation that some of these payment processors should continue to do well. Another top holding in that SPHB ETF is Invesco, and this is an asset management firm. They did have this nice gap up base breakout on earnings in an uptrend and pulling back very orderly to that upward trending 10-day simple moving average. A couple of other names that are with my MEM Edge report that I want to share with you that are also in this high beta is, for instance, Gap GPS. That's been a nice big winner for us. They are due to report next week. That's important to note. But the company is in the throes of restructuring. They're pivoting into digital, and they've closed about 300 of their retail brick and mortar stores. But Wall Street is very bullish, and it's in a very confirmed uptrend here. So be interesting to see how the company does as far as reporting their earnings next week. Let's take a look at Align Technology. Take a look at this huge gap up, huge volume, much better than expected earnings. The company does the Invisalign product for teeth straightening. Now, what I want to share with you here is when a stock has this gap up, particularly on volume, breakout to new highs, you're going to see this waffling around as the stock digests this huge advance here. But what you want to pay attention to is you want to make sure that it stays above, in this case, the 420 level, stays above the lower area of that gap up. And this is very constructive, very tight back and fill. RSI still positive. This is simply stating you're in a period of consolidation. So keep ALGN. If you own it, stay with it, keep it on your radar. I urge you to take a look at XAR, Aerospace and Defense. We ran out of time. And also take a look at the MEM Edge report. There's a link below. You can trial that. It's filled with intel on not only the markets, but real insights into the sectors and how you can capitalize by strength in these sectors with individual stock selections. Everyone have a great weekend and have a great holiday next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.